Local trade will be contending with bumpy sentiment. Yet again today, the JSE ending yesterday muted, with global markets mixed as investors digested the latest U.S. consumer inflation data. Well, the currency also weakening to 18 Rand 90 cents against the US dollar, adding pressure to South Africa's inflation outlook. Let's speak now to Chief Investment Officer at Makwe Fund Managers. Makwe Masilela, thanks for your time. Let's get a quick sense of how the markets are faring in early trade.
As you said, we continue to open muted and people are still continuing to digest those inflation numbers yesterday. But later in the session, we'll be getting a interest rate decision from the Bank of England. And given that the inflation is still at a double digit and stubbornly so, we expect them to increase interest rates. And also we've got some poor inflation numbers coming out of China because their CPI, consumer inflation, and their producer price index continues to slow down. And that itself is a reflection that there's no domestic demand. And remember, this is a country that we hoped it will be lifting the global economy as they reopened sometime in December. But so far, it seems that it's not going to be happening. And the debt crisis issues in the U.S. continue to play itself. And as a result, it's overshadowing that G7 finance ministers meeting in Japan.
Yeah, let's talk about the currency. It does seem to have be firmly in the spotlight, weakening to a 3-year low against the dollar on Wednesday. Are we going to see it reach that 19 Rand mark and perhaps sliding, which I suppose increases the chances of another interest rate hike?
It is possible. As it is now, it's 1892, so it's only 8 cents away. And for the fact that commodity prices are low today, meaning they're very weak, and the rand itself, it's a commodity currency. It's a possibility that we can touch that 19, because now it means that's not working to the rand's advantage. But we know the reasons as well. The issue about load shedding continues to be a big deal when it comes to our economy. As a result, we expect our economy to fall into a recession. And yes, it is inflationary the minute you start seeing the rand weakening, because as a country we are a net importer, and one of the things that we continue to import continues to be Brent crude, and we know that everything that we do is got a transport element on it, and as a result, when inflation starts going up, unfortunately the Reserve Bank might not have much of a choice but to continue to increase interest rates in their next meeting.
Well, if you talk about those interest rates, can I get your quick sense? That decision is upon us. Do you think that we're going to get a rate hike?
Definitely. After we've seen the U.S. increasing by 25 basis points last week, the European Central Bank did the same thing last week, Thursday, and today we expect the BOE to increase by at least 25 basis points. So for us to maintain that interest rate differential between the rand and the U.S. dollar is only good for the Reserve Bank to continue to increase interest rates and make sure that they continue to fight this high inflation.
Sure. Let's talk company news. SAPI publishing its second quarter results. How have they fared in the period under review?
The environment is not looking okay because the market for paper, for pulp, are not looking okay. And remember, the guys made a record profits. So as a result, they are under pressure now because demand is not that great. And hence, we've seen some production cuts when it comes to North America, the likes of Europe, and also to try to meet this sluggish market demand. And the profits have been affected by their poor sales, the cost inflation, and also their inefficiencies. And we've seen sales dropping by 22%, profits as headline earnings per share down 67%, but the guys managed to reduce their net debt by 32%, which I guess is a good thing.
Let's conclude the conversation with TFG. This is the owner of Foschini, Markham's, Jet, and At Home, reporting reduced sales in the United Kingdom and Australia in the month of April. Take us through their numbers.
I think generally we need to understand that their retail turnover managed to increase by almost 19.4%. And the likes of Australia and the UK, they're coming from a high base. Last year, the guys had to go back and try to buy things as people were going back to work. Hence, the sales were up. So now it's coming from the high base. So the comparison tends to be unfair. But yes, generally the sector is not doing okay because come here, other than we've seen their clothing sales dropping. We've seen that load shedding is continuing to impact them. And remember, this is a company which for the past 2 years has been expanding, buying the likes of Jet, buying the likes of Tapestry, Choreograph, stuff like that. So the guys are going to pause because opening new stores become more expensive because of load shedding. And anyway, they're operating in an environment where consumers are so strained. But yes, it is the UK market as well. They're trying to restructure that to make it more of a smaller business than before.
Makwe Masilela is Chief Investment Officer at Makwe Fund Managers. Thank you very much for that market update.